let's get to the big conversation this morning. Sandeep Bhatia, Managing Director and Head of Equity India at Macquarie Capital, joining us on Talking Point this morning. Sandeep, great speaking with you. You know, as primary markets has been all the focus and today as well. So let me start with a question on that overview. This action in the primary markets, what is it telling you about where we are? Is it telling you that we're heading towards a bubble, or is it telling you that we're seeing more depth now as far as Indian equity is concerned?
So I was reading an article. On the weekend. So I think to some extent the article headline was, "Are AI bubble necessary for investment to come?" So I would answer this question of yours in the same vein. Yes, there is a bubble in the primary markets, but that's how markets function. And when bubbles happen, we see an expansion of markets. We see an expansion of businesses which are listed. And that's how we see the broadening of the depth and the breadth of the market. Eventually, all bubbles will burst. As long as these businesses are solid, their cash flows are there. Even post the bubble, these businesses will last. We saw a Y2K bubble also at one point in time, but of course, the tech business has matured and become much larger than it was when it started. So we are in this bubble phase. It has its good parts. It has its bad parts.
Okay, what about the markets? Are we now in the phase where it's time for recovery? Quarter two, by most, at least most analysis, has been better than expected. I was wondering what your take is. Are you thinking that this excitement is because of a low base or lowered expectations, or is it really as good?
I think it's a good quarter. I think it's also the prospects of an improving consumption demand, which has been missing for some time, for more than 18 months, I think. I think all that is contributing to the underlying bullish tone to this market. Valuations have corrected in terms of time as the markets have been flat to marginally down, but it's not a major correction in valuations. So essentially, we are in a, what should I say, a suspended animation phase. It's not, it's like liquid oxygen. You know, won't die, but won't live much. So yeah, it's a single-digit kind of return if the market starts moving from here. Earnings growth would be in the region of 12 to 15%, and market appreciation should be slightly below that.
Sandeep, morning, Alex here. So heading into this quarter, there were quite a few big bang announcements. There was support on the fiscal side, or well, at least at the tax side, there was a GST 2.0 rollout. And there's also monetary policy that has been supportive. So the question a lot of people were asking was, does earnings catch up? And do you see those green shoots coming through? And will that be the fillip that the market needs? That fillip hasn't yet come through, Sandeep. So I'm wondering, what according to you is the trigger that will take markets higher from this point?
So what are the sectors which contribute to earnings? Just look at the math. It's not super secret. The math is that the largest contributor to earnings, market cap and earnings, would be the banking sector. Do we expect earnings? There has been actually a surprise in public sector bank earnings. They've been stronger than expected. So if we see banks' earnings come better than expected, maybe at 15% plus, we are not saying that right now, but the biggest earnings surprise would be coming from some of the large caps and large sector contributors. So we'll have to wait and see whether that happens. We are seeing inflation come off. We could see both the US Fed rate continue to cut into next year. We would also see with a lag the RBI potentially cut. As inflation in India, for the first time in my 30-year career, I see inflation in India lower than inflation in the US. So to that extent, if rates get cut, consumption remains good, we'll see broader industrial demand come back. But earnings and earnings pressure, if rates continue to come down, NIMs can come under pressure for the banking sector. So in the near term, I would not expect a major earnings surprise. By the near term, I mean next 6 months.
Yeah, I want to delve a little deeper into that. Banking certainly, but I'm just wondering whether the corporate lending side will really pick up. And it's tied to my next question, which is private capex. It's been sluggish for the longest time, but the signs are there that a lot of companies will need to bolster capacity. You've had, for example, the largest car manufacturer in the country say that if things go as planned and small car comes back into the fore because of GST 2.0, they will have to build capacity. Will that bolster consumption in the next year? Or do you think that something will pan out in the second half itself? Will you have to wait till the start of next year?
Good question. I think it has to be answered in layers. So private capex coming back at the margin, yes, private capex will improve. There's no doubt about that in my mind. But the real question is if this capex is going to be funded from internal sources or from equity or it is debt. I think debt will increase, but it's not going to be something which would be as large as what we saw in the 2007 to 2012 period, because I think corporates, CFOs are structurally much more risk averse than they were during that period. Also, the sectors which were borrowing then, those sectors are not as large borrowers right now, essentially the real estate sector. So what do we say? Yes, there's an improvement in capex. Now, there's a second part to your question, whether small cars can come back. I think they should come back. But will that be the hatchbacks of the 90s and 2000? No, there would be still small SUVs. We have seen, it's very easy to answer that question if you look at the pipeline of launches coming from all the large manufacturers. Most of them have looked at sub 4-meter SUVs. So it would not be small cars, but will be small SUVs. And these will be expensive SUVs. I think car prices have gone up and the SUV category has the ability to command a higher premium than hatchback today in the consumer's mind. So all told, I think consumer lending may come back. That's because of small SUVs and lending because of that. So I see overall broader consumption coming back, capex also coming back, but lending to be still, indebtedness and lending still to be muted.
In that consumption play, Sandeep, you spoke about autos. Would that be at the forefront of it? Do you think consumer staples, and we saw that in some of the commentary and results as well, discretionary spends, and all of these kind of businesses still have to see the boost of their cycle?
Yes, I think discretionary, I will still be a bit hesitant, but yes, autos, we like M&M, definitely. That continues to do well. We'll gain market share. I would look closely for both Hyundai, which has also seen market share pressure. We have a new CEO, and I'm sure he has plans there. So I would definitely look at autos. And on the sorry, what was the other part? I'm missing that. Staples, as I said, I would be valuation still need to correct, but I would definitely look at Asian Paints. It has been an underperformer. We have seen some management changes come through in its new competitor in Grasim Opus. So we would definitely see some of the appreciation and interest come back in Asian Paints.
Okay. In terms of real estate, do you think that we are now at a muted part of that cycle? Because real estate is a tricky play. Interest rates are coming down. But with the kind of concern for jobs in Bengaluru markets, etc., do you think that there's some fears there on the horizon? Just wondering what your take is on real estate.
Well, we don't have in-depth coverage of the real estate sector, but just my own personal observation, I think the best in terms of real estate is behind us. Now, on the margin, we have seen interest rates coming down, as you just mentioned, but prices have also gone up. So unless we see a real 5-year expansion of GDP in the 12% nominal range, real estate cannot be a big driver.
I want to ask your opinion. Sandeep, we've already spoken about quite a few sectors, but specifically on pharma. And you've seen some pretty stellar sets of numbers come through. I think there's a lot of interest and excitement about CDMO. How do you view the Indian manufacturers of pharmaceuticals amidst this shift away from generics and towards biosimilars, towards formulations that are created by our pharmaceutical companies?
I think that's a good question. We have liked Sun Pharma for a long time. I would think continue on that. The issue with all pharma stocks is essentially there are significant specifics in each pharma stock. And to that extent, it's not a sector which has an underlying theme.
Sandeep, please, you go ahead and have a glass of water. We don't want you to struggle through that, and there's no worry. I have one with me as well. But you were making a point on pharma, and you were talking about Sun Pharma.
Yeah, so my understanding is with the pharma sector, there are very specific companies and very specific events which drive the companies. So unlike the banking sector or the auto sector, you can't make generic statements. Within that, we like Sun Pharma.
Sandeep, just getting your take on the whole issue of the trade deal. Now, one of two things is likely to happen first. Either the Supreme Court comes and says that all of these tariffs that were applied were illegal in the first place, or we do come up with some kind of a bilateral agreement between India and the United States. How big a factor then does it become to re-rate India?
Well, I don't expect further re-rating of India that much, whether there's a trade deal or there's no trade deal. I think ratings are already quite high. I think what it basically does is make earnings growth visibility improve, and that would be a good thing. I don't think that can drive a major re-rating. As far as the US Supreme Court, it's impossible to say how court judgments go, but I would think that even if there is a negative judgment, the executive in the US has many other tools, is what I understand from the press there, to continue to put tariffs in some other way. I think the real issue is not just one trade deal with the US. Of course, it's our largest trade partner, both in terms of goods and services. But more importantly, it is where, as a whole trading system, we are headed to. And now, as we discuss, we want to do trade deals with all large blocs, whether it's Europe, whether it's ASEAN, or whether it's US. And that's something which makes business more complicated.
Why do you think FII flows have not quite yet reversed? Or do you think that they're going to be tepid for the remainder of this financial year?
Well, it's the AI question. Which two countries and stock markets have the largest waterfront and choice of stocks? It's the US and China, and India or any other market is absent. There's been interest in Europe because Europe has been cheap, and that's something which has helped Europe performance. India has not been cheap. So I think if the AI bubble bursts, actually India will benefit.
Sandeep, then coming to the culmination of our conversation with you, and you've already listed out a few names of companies that you like in this context, and financial seems to be of preference for you. You've talked about in the automotive space what you like, but just to pull all of that together, as an India strategy, how would you look at the market right now, and what specific themes or stocks do you like right now?
I think India's strategy essentially means you look at the 10 to 12% appreciation over the next 12 months. You look at sectors which have earning visibility, which are autos, which are banks. And these are the stocks which I've already mentioned. I would think capex is something which I will observe very closely. And if capex comes back, it would essentially mean that growth will be longer term in the 7% range rather than 6.5% range that we have seen over the last 12 to 24 months. All told, this is a market which will not give you some stellar returns, but it will definitely be something which will keep your interest alive.
Yeah. Okay, keep your interest alive. That I can agree with 100%. I don't know about stellar returns. Thank you so much, Sandeep. Always a pleasure chatting with you. That was Sandeep Bhatia, Managing Director and Head of Equity India at Macquarie Capital. And I think the point that he's made about AI or the lack thereof from the Indian markets as a factor of why there's dismal FII interest is an important point.